What a crazy day on Wall Street. AMC stock is up almost 2%, at least at the time of recording this video. At the same time, the Nasdaq was up over half of 1%. Now, pretty strong in the red. There's one specific thing that happened that you need to know as an investor in this market. We're going to give you a rundown of this latest rally with AMC, any and all of the news that came out today for AMC stock, and everything you need to know for tomorrow. We do have some important economic data coming out overnight tonight, so a little bit after you guys are watching this video, a couple hours or so, you're going to get some very important data. So we got a lot to get into. The work is cut out for us here in this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. So let's start with the biggest piece of AMC stock news today, which doesn't have too much of a material effect on AMC. It does kind of make you question the judgment of Adam Aron. Nonetheless, we do have a little bit more information on this situation. Quote, unfortunately, last year I became the victim of an elaborate criminal extortion by a third party who was unknown to me related to false allegations about my personal life, Adam Aron said. Quote, rather than give in to the blackmail, I personally encouraged counsel and other professional advisors and reported the matter to law enforcement, he said. I did so knowing I risked personal embarrassment, but with my access to resources, if I did not stand up against blackmail, who could? The New York woman behind the blackmail attempt, Sequoia Blackwood, pretended to be a former romantic partner of Aron using an anonymous online account beginning in March of 2022. She then prompted to extort Aron of $300,000, threatening to expose Aron's online behavior to the AMC board. Blackwood was charged in a Manhattan federal court for her extortion attempts and was sentenced in July to time already served in jail. Aron said Thursday he was asked by law enforcement to keep the matter confidential during the investigation and legal proceedings, and that he informed AMC's board after Blackwood's sentencing. This indeed was entirely a personal matter, and the matter is now closed. So yeah, like Adam Aron said, this was a personal matter. It has no financial impact to AMC whatsoever, but it is a questionable judgment, to say the very least. I'm just glad those pictures were not put out there, because yeah, that would be quite embarrassing for sure for Mr. Adam Aron. So let's go ahead and get into this developing situation here in the market. So what's going on with AMC stock? AMC stock is currently up about 1%. The Nasdaq is now down about a third of 1%, at least at the time of recording this video. At one point, the Nasdaq was up about a half of 1%, a little bit more than that. Now, what just happened is weird, okay? So we had a 30-year bond auction at 1 p.m., and this came in at 4.837%. The previous bond auction was 4.125%, so 4.12%. Your 30-year bond yields just jumped big time. This caused the 30-year treasury yields today to rise about 12 basis points. Basically, the difference of where you were trading earlier in the day to now, which was yesterday you were trading at 4.73%. So now you're at 4.85%, basically in line with what the bond auction just came out as. So that is interesting. Now, the 10-year bonds are up 10 basis points today after this bond auction. So you're really getting just a blowout of the yield curve. And as you guys know, a lot of this is likely algorithmic. When bond yields go up, especially big time in any given day, stocks tend to go down. So this recent move down you have seen in yields is almost entirely just gone. Right? You've seen a lowering in yields. A lot of that, I do think, has been a rush to safety, a fear move due to this Israel conflict. Now, the markets at the same time have been higher because I think this algorithmic trading factor, whereas when yields go down, stocks are going higher. When yields go up, stocks are going lower. You're seeing that still playing out. The markets didn't quite understand that the bond yields falling was likely a fear move rather than anything else. So you still want to be very careful here. Big money is or has been very defensive lately the last couple of days when these yields go down. investors are actually buying the bonds. Today, they are selling the bonds. Today, they do not want to own the bonds. So that is good. No longer seeing that fear move, but still not a great situation whatsoever. Now, to make matters worse, these yields rising are making mortgages more unaffordable. Now, about 43% of your income goes to a monthly mortgage cost. Back in 2020, this was around 20%. Back in 2012, after the Great Financial Crisis, this was around 17%. You are at the highest levels of unaffordability in the housing market in a very, very long time. You almost need to see housing come down at this point. I point this out because a lot of people think we're going to have a soft landing. And when you're paying 40+% of your income towards a mortgage payment, no, that's not going to happen. Even legally, I own rental properties. You're not allowed to rent your house out to a tenant for 30% of their income. They can't spend over 30% of their income. I was trying to figure out the best way to put this towards a rent payment. That if you sign someone on a lease that has to pay more than 30%, you could potentially be the one at fault because you let someone take out, a lease on your property and they don't even make enough to be able to support it. So you're able to do this in mortgages. You're not allowed to do this with renters. Guys, we are one big house of cards, okay? Now, what I have said many times continues to remain true. The biggest negative potential catalyst that we do have for our markets here is this Israel conflict. If this Israel conflict does turn into a multinational war, some kind of big problem, well, yeah, that's not going to be great whatsoever for our markets. Specifically, again, because the Strait of Iran controls about 30% of the flow of oil, they could slow that down, they could stop that. That would have a big effect on your price of oil. I just think he likes to just scream to hear himself. I'm sure you guys have heard that here in this video. There's nothing wrong, there's nothing going on. I don't know, okay? But if you hear a random scream, probably just because he likes to hear himself. But nonetheless, that is your biggest risk factor here in the marketplace. Now, let's get into some of the data coming out later on tonight, as well as tomorrow. So tonight, you're going to have your inflation rate year over year coming out of China. Now, this data comes out at 9:30 and then more data at 11 p.m. This is Eastern Standard Time. So for your inflation rate, you're expecting 0.2% for your year over year headline. 0.1% was the number last month. Your inflation rate month over month is expected at 0.3%. Now, China hasn't had an inflation problem. They have had a deflation problem. Now, your month over month number has been in deflation territory quite a few times, but the markets really paid attention when your year over year went into deflation. That was back in July. Remember that? People started to kind of freak out and panic a little bit. That's because deflation is really, really bad. Imagine it like this. In a normal economy, right? If a company needs to cut prices, that means that they won't be able to keep as many employees they have. They'll have to lay off employees. Those laid off employees aren't buying as many products, leading to potentially more price cuts, leading to more layoffs, leading to more price cuts and more layoffs and bankruptcies. That's why deflation is such a big fear out there. So if you get inflation data out of China that looks more deflationary than inflationary tonight, that's obviously going to be a big negative for our markets coming tomorrow. PPI expected for China at negative 2.4%. Last month was negative 3%, so expecting a little bit of a recovery there. Your exports and imports, this is another big one to be watching. A lot of people are looking at this like a gauge for the Chinese economy. Exports year over year expecting negative 7.6%. Imports year over year expecting negative 6%. Any more negative than that, you're probably going to get some fears out there of the Chinese economy. Now, coming on tomorrow, Friday, you're going to get Michigan consumer sentiment for October. You're expecting 67.2. I don't think this number matters all too much, but your inflation expectations for your 1 year and your 5 year, those are important. 5 year inflation expectations are expected at 2.7%. 1 year inflation expectations are expected at 3.1%. So if you do get, higher than that for your inflation expectations. The markets might not like that. The bonds might not like that. As you can see today, the markets are basically a puppet to what the bonds are doing. If the bond yields are going higher, stocks are going lower. If bond yields are going lower, stocks are going higher. Really for whatever reason. The markets don't even care why the yields are doing what they're doing. If it's a fear move or not, markets don't even care. If the yields are going higher, stocks are going lower. If the yields are going lower, stocks are going higher. That's basically it right now as far as the correlation. Now, with AMC stock specifically, AMC having a fantastic day yet again, stringing together quite a few green days now in a row. Eventually, we will get a red day. We want to see a small red day, but today is definitely not that day as of right now. The situation could get worse throughout the rest of the day today. Keep that in mind. Who knows? That's always a possibility. AMC stock is $10.62 as of right now. You are up about 2%. You do have a short interest of estimated at 7.72%. These numbers are phony baloney. Don't believe anything you're seeing over here. Short score of 58, $159 million worth of short positions. Free flow out on loan at 11.04%. Shares out on loan about 22 million. Days to cover 1.29. Cost to borrow 1.98, and utilization of 46.01. So phony baloney. Don't believe anything you're seeing over here. The option activity looks very bullish. You are continuing to see a lot more calls in the money than puts in the money. About 40,000 calls in the money and about 3,000 puts that are out the money. And again, on a technical basis, the situation hasn't changed all too much. You're well above $9.50. That is the level you want to hold support at. You're well above that. You're above $10.50 per share. If you can get a close above $10.50, then this situation looks really, really good. And soon you could be at $12 per share. And then after that, you start to make your way on a run to $17, $18 per share, potentially even higher than that, guys. So that is going to go ahead and do it for this video. Not too much else to actually say. Not a lot has happened, but the markets themselves, yeah, you've definitely seen a sharp reversal due to this bond auction. So that is going to do it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys would like to come trade with us live in real time, get access to all of the trades that we are making every single day. Every time I make a trade, I send out an alert, as well as any breaking news like this one. We had you guys informed on the situation, what was going on, first things first. So that is it. You guys enjoy the rest of your day, and I will see you in the next one.